Yo, 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 what's going on, everybody? This is CPA Strength. I am the strongest licensed CPA in the state of Florida. Yeah, buddy, that's who I am. What do you do, dude? Listen, man, I teach the world over basic accounting, building blocks by building blocks by building blocks by building blocks. I happen to have the best playlist in the world. It's right over here. It's an accounting playlist. If you hit this card right here, all your dreams will come true. But let's get into the current topic of today, which is accounting for beginners. This is my classic series 79. Accounting for beginners number 79. That's my classic series, boy. Yeah. This one's going to be office expenses, but this is like, I think, our seventh video in our Widgets Inc. So we're going to do something brand new. We are going to do office expenses and we're going to do computer and internet expenses. So we're going to do 2 expenses with 1 journal entry. Oh, mind-blowing, right? Anyways, this is my DCAler. This is why you might know me. Thousands upon thousands of people have learned accounting, have gone and had elevation, had step up with this. Okay. Debit, credit, asset, draw, expense, liability, equity, revenue. See, I say it once or twice every day because I do these videos. So how am I going to forget it, right? All right, what are we doing in 79? Widget number 6. What you doing, boy? We're doing office Widget Incorporated buys $3,000 of office expenses and $3,000 of computer and internet expenses for $3,000. And we're gonna do a journal entry. We're gonna do a journal entry first. You know how it goes: journal entry, chart of accounts, general ledger, balance sheet, income statement. That's how we does over here for Widget Incorporated for however knows how many times, but. We just had our half of the year. This is our 7th. We just had our half a year. We've been going. We're doing pretty good. We're still open. We're still paying the bills. Yes. We just got some money in, so now we're spending it on expenses. That's pretty much how it goes. Get the money in, it goes out. You try not to have it go out so fast. So this is our journal entry on 7/31/15. Now this will happen fairly often. Let's say you do a bank account. Let's say you do a bank statement. Let's say you're reconciling someone's bank statement, or you're doing the bookkeeping for the bank statement. Basically, you're taking whatever happens from the bank statement, and what really happens on a bank statement, money going in or out of the bank. And they might separate it sometimes between income for the month and then expenses for the month. So you might have 2 journal entries. You might have a journal entry for the money coming in. So money coming into your account, that would be a debit checking account or debit cash. And then you would credit all the different occasions why money would come in. So you just have one money coming in. I don't know why I started with that example, because we're not doing that in this one. We are having money going out. But that would be the other thing. So you'd have money going out. So you'd have money going out. That's going to be our credit, by the way, is checking account money going out. It's an asset leaving. If it was an asset going, it is an asset. If it was going up in value, it would be a debit. But since it's going down in value, it's going to be a credit. What comprised of our $6,000 credit was these 2 expenses: computer and internet for $3,000 and office expense for $3,000. It's I don't know, this might blow somebody's mind. Like, I don't know, when I started working for a company and started going through bank statements, a lot clicked for me. So that's our, so basically something new we've done for one. I don't know if I've done this before, but we have one asset for $6,000 credit, and then 2 debits, 2 expenses for $3,000 each. But now, the main thing I always say is debits equal credits. Debits equal credits. Do debits equal credits here? Yes, they do. Now you can have, I guess 100 debits, and you can have 1 to 100 credits. You can have various amounts, but they equal. All right, next board. Oh my God, we're back. Okay, we're just gonna finish this up. I'm having a good time doing these. Let me just tell you that for now. So, chart of accounts. What do? Well, you know we've had the checking account. We've been done had the checking account. What about we added 2 expenses in our chart of accounts. We added computer and internet and office expenses. So look at our chart of accounts now. These are all accounts that we've used in our business currently. And as you know, if we have a new account, which we probably will, next accounting for beginners, yes, we will have a new account. Well, we just had 2 new ones this time in our journal entry, so we made 2 new accounts. So it happens, right? We've been going for a while. We had computer and internet, and we had office expenses, so we added it to our chart of accounts. So now currently we have all these different kinds. And the chart of accounts is either going to be an asset, a liability, a revenue or expense, or an equity account. That's what the chart of accounts is going to be comprised of. Now the chart of accounts, those 5 accounts, those are in DC Adler. And the chart of accounts is the balance sheet, assets equal liabilities plus equity, and revenues and expenses, which is the income statement. But anyways, let's go on. What's inside? Let's go to our new ones, computer and internet, because now we're going to go to the subset of all the chart of accounts in our general ledger. What's going on inside every account? So we've got 731 with computer and internet for $3,000. That's the only thing. We have a $3,000 expense on 731. One expense inside a computer and internet. Same exact thing for office expense. We have one entry for $3,000 at 731.15. So each of computer, internet, and office expense both have balances of $3,000 at 731. Now, what other account changed? What other general ledger account changed from our chart of accounts from our journal entry was the checking account. Now stay tuned next time, because I think we're going to have a rare case where we're not going to use the checking account. But as you can see, we've used the checking account every single month, every single journal entry. That's why I always say, if you can follow the money, you're gonna have a lot easier of a time in accounting, or at least that's my that's what I found. So we go through 731. See, we had, I just put one, since yes, it was 3,000 and 3,000, but we had one little journal entry for 6,000. I could have separated these, but I chose to include it together. Anyway, 731.15. From the checking account, you had $6,000 leaving, right? Yes, because you paid $3,000 for computer internet, $3,000 for office expense. And that is also indicated by the journal entry. Anyway, after adding and subtracting all the checking accounts, the 731.15, we have a $5,000 balance. Let's go to our last board here. You know, I mean, this one is just fun here. I love doing the balance sheet and income statements at the very end. I'm going to try to talk about some different stuff this time. Let's go. Balance sheet, income statement. Balance sheet's on top. Income statement's not. Balance sheet's on top because it shows the net income, and you can summarize what happens in the income statement just from seeing the top of the balance sheet. Income statement is from a period. This one's from the beginning of our business, 1/1/15 through 7/31/15. That's this income statement. Now the balance sheet is just for one certain point, day and time, one point of day and time, and it's for 7/31/15 is this balance sheet. The way I would just look, oh, assets $9,000. What is that $9,000 of assets comprised of? $5,000 in the checking account, $4,000 of truck, a fixed asset. Okay, so that's what my assets. Then I would know that it's got to equal 9,000, and I would look, well, okay, so I have $9,000 in my account, in my business here, 5,000 checking, 4,000 truck. Like, what, so that's what the business has. Now, basically you say, is assets equal liabilities plus equity. So you have 9,000 in the business. Liabilities, what of that $9,000 does it owe to somebody else? And what part of that $9,000 does the company own itself in equity, capital ownership, And the answer is you look real fast and it owes $10,000. You're like, we only have 9,000 in. Yeah, because I guess the company actually has a negative $1,000 equity loss in net income. Because the net income comes through. So you'd see all that right there on the balance sheet. And then how did you get the negative $1,000 in the net income? Because that's from the income statement, so that's on second. So you can basically see the summary from the balance sheet. Now this would be on second, or the bottom half. So you'd flip the page and see, how did you come up with that negative $1,000? Well, it's revenue minus expenses. So you have revenue of $12,000 minus expenses, and here's $3,000 computer and internet, $3,000 office expenses that we just added. So we have a total of $13,000 in expenses. So revenue minus expenses is the net income, which is negative $1,000. So that's the income statement. Going over to the balance sheet, and boom. Yeah! Let me just say, oh, I have a couple minutes to talk. Yeah, I went kind of fast. It was weird. I woke up on the wrong side of the bed. I seemed to just... I don't know, people just don't seem to know me, know who I am. Why did you put that in a video? Like, why do you care? You know, and I'm trying to be positive this month. Everything's trying to, it's hard, it's way harder said than done for me. But whenever I have something going negative in my head and I just think about it and think about it and stew and stew and stew and I don't get anywhere and I just think about it, think about it, think about it, and it just gets me so upset, and it gets me in a state of what's the point, and I should just not be here, and it's just bad, real bad. So I try to think of something that makes me happy, and it was hard. I got here at 3 in the morning, started making my new board, like what's going to be in our business, and maybe the caffeine started kicking in. I just started feeling better, and I was getting sidetracked a little bit. But I gotta tell you, once I was excited about this lesson, and I know inside that I'm really doing a good thing, and this gives me purpose to film and do accounting, and this I just feel like I'm filled with much purpose. And it wasn't so much an act to be in a really good mood once I started filming. So yeah, I just thought I'd share you with that. Anyways, I hope you have a great day, evening. Share, like, subscribe. DC Ailer, don't be stingy, and I'll see you in the next one. Deuces!